I think this year almost everybody felt that earnings will be poor because there is a carryover of the last year that is still going on. But we do feel that next year, FY16, earnings should be in the 15-16% range, because a lot of the oil marketing companies will do well, a lot of the banks will do well, especially private sector banks. Even the PSU banks on this base they'll do fairly well. So I think we should see growth coming in the next year, and all the bets in the market are currently for FY16 growth. But as I've always said also, that I think the market, investors, everybody is actually betting on an investment-led revival. And I strongly feel, and I think it will be a solid thing for India. We might have a consumption-led revival. Consumers will buy, and I think for that, the upcoming budget is very important. We need people to start spending on cars, on housing, on retail goods. So I think it should come. As the confidence comes in, and the retail-led growth is going to spur the economy going forward.
You've got a lot of marquee speakers, the chairman of CIPLA, you've got the chief minister of Maharashtra. So what's the common theme here? One is a champion pharma industrialist, other one is a politician.
No, I think the larger thing is, again, I think the India story, because India's story has various parts, and as I said earlier, a lot of the macroeconomic parameters have fallen in place. We have, obviously, oil price has been a big savior. I think rupee is very strong. The current account deficit is going to become a surplus. I think because of this, even the fiscal deficit problem is largely solved. Inflation is down. So there is a macro, but the other part of the macroeconomic picture is the governance, the government's approach to investment. I mean, for the last 4-5 years, it was felt that the Indian government, the old government, was not business friendly. So I think it's very important for investors to see the governance approach, the administrative approach, which is going to be investment friendly, which is going to be for creating jobs and all of that. So for that, a chief minister of Maharashtra is very important, because he also articulates the vision he has for Maharashtra and his party's vision for India. I think getting CIPLA chairman and all, because as I said, pharmaceuticals is still growing well, and we do believe that pharma story is still continuing, because India still has a lot of headroom to grow. So again, it's basically a combination of the macroeconomic perspective and the microeconomic opportunities.
But to be fair to critics, so far nothing big has come from the new government. There is a grand vision in place, but unfortunately no big idea has come out. So I'm not questioning their their approach, but 6 months, 7 months into the new government, nothing earth-moving, nothing earth-shaking has come out.
See, India will not have earth-shaking thing in any case, but I don't agree with this completely, because I think a lot of good things have happened. I think the coal, the cleanup of the coal mining and the auctions which are going on, with one stroke, they have actually cleaned up 20 years of mess. The insurance FDI has been.
Is that good news?
I think it is. It is very good news, because it is also showing. It's also symbolic, and it is in absolute also required. Also, I think the other thing, if they get the GST done, a lot of other administrative, the clearances are coming faster. So I think this government has done a lot to show that they mean business. They want to improve, India's focus on investments, India's focus on going forward. And the more important thing is, unlike the earlier government, where government was saying something and sometimes actually doing the opposite, there is a lot of consistency, what they are saying and what they are doing. Of course, as all investors, people want a lot more, they want everything faster and all. But I think we have clearly gone forward. I think, the oil subsidy, they got a chance to, get that. But I think getting, deregulation of the oil prices, a lot of the work is going on the cash transfers. A lot of new stuff that the government is doing is fairly path-breaking on smart cities and all of that. It will take time. So I don't think this government is short of ideas. Their ideas and their execution is fairly consistent. But execution takes time. I mean, you can't just expect 3 quarters. But having said that, what they've done in 3 quarters has also not been empty. I mean, we have moved significantly forward.
So I'm going to address the consumer part. And there are 2 ways to looking at the consumer part. It's a great opportunity. India will be a consumer-driven economy going forward. But what explains the underlying valuations in the Hindustan Levers and the ITCs and the Asian Paints of the world?
So I think in consumer also we have very limited good large players, but investors want to put money, and that's a precise reason why This explains, and I feel that that is where the opportunity is to have a broad-based rally and broad-based participation. If you have new themes emerging, new areas coming about, then investors will move away from consumer at 45 times P to, let's say smaller mid-cap or any other sector. Like if EPC starts working out in our country well, if, then I think probably investor will say, oh, I'm happy to invest at 5 times P, then 5 times P, but provided that looks good. So I think you will see shuffling of money as other segments or sectors starts doing well. If asset quality starts improving, you will see further money coming into banking. So you will start seeing that reallocation of sector. It happens. It's a part of the cycle. And I do feel that, while these are very good companies, but these valuations are not sustainable.
Do you think now going forward, the rate of surprise or the rate of earnings surprise will come from the old economy basket, the cyclicals, the industrials? The consumers have done their bit. IT, the P multiple has expanded and pharma is already in a green zone.
The real thing to look for in any economy, according to me, is the volume growth. And I feel that volume growth is unlikely to pick up in next 1 or 2 quarters. I personally feel that probably you will start seeing volume growth only late or second half of next financial year, because I think currently government is right now in the stage of policy making. Policy implementation will happen. That will lead to investment cycle. Government has pulled back on the spending, which has obviously sort of curtailed the expenditure. So I think right now we are in a consolidation phase. So you moved from pessimism to sort of optimism, but numbers are not reflecting because we are consolidating. The real growth will start happening, according to me, only in the second half of the next financial year, and the real volume growth will happen probably in 16, 17 and 17, 18, because whatever you are doing is unlikely to give you any result in next financial year.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.